Yuri, welcome back to the podcast, man.
Hi, thanks for having me again.
No worries. You're our. We just had Seth back for the second time the other week, so you're our second guest back for the second time. So congratulations on that.
Wow, thank you.
Man, I saw you were just speaking off before recording. You've obviously just released a new course for crypto and business, and that's obviously sort of the main focus of this video today. So let's start off really simple, right? Tell me what are obviously some basic use cases. Like what can businesses benefit from adopting crypto?
Yeah, so most businesses they usually start thinking about how do I accept this cryptocurrency, how many of my existing customers will pay with that. And I don't think that is actually beneficial. Like if you already have a customer and they're willing to pay cash or credit card or crypto, it doesn't make much of a difference because you can always buy crypto if you want. So it's not a very useful thing. So one of the first things that I tell people is figure out a way how you can get new customers that come to you just because you accept crypto. So it's quite interesting. I have an interesting example from Czech Republic. Well, actually, more European thing. So there's a famous retailer in Europe called Alza. It's like a smallish version of Amazon. They started like a computer store, but now they sell dog food and everything. So they kind of grew. And they started accepting crypto quite early. And it was one of the ways how they actually expanded into Germany because there were quite a lot of crypto miners in Germany, and they didn't want to, mine crypto, exchange it for fiat to buy new GPUs. They wanted to do it in private and without an exchange. So what actually happened is that they got new customers just because they were accepting crypto. They were not even cheaper than Amazon, so you could order the GPU on Amazon and get it cheaper. But they started doing it. So one of the first things that I tell business owners is, okay, there are these people who love crypto. They would love to pay with their Monero, with their Bitcoin. They are looking at the maps where it is accepted, and quite often they actually have money, because they hodl and it moons and everything. So you get a niche of people who are not only wealthier than the average usually, but they want to use it. They're actually willing to spend it. So, do you want to be the one cafeteria in the town that attracts them and allows them to spend their crypto? But it's not like a random grandma comes to get an espresso and you tell them pay with crypto. Doesn't help you much.
Of course.
But for example, if it's a cafeteria, you're in a town, you organize a Monero meetup, for example, and then people come and they realize, okay, this is a nice place, good cafeteria. They accept Monero. I'll come back next time, or I want to have a meeting with someone, and I'll just go there because they treat me nice. For this to work, you need kind of to go a little bit farther than just install a wallet and show QR codes. You need to be welcoming. I often had an experience that I was in a cafeteria in Netherlands, for example. I wanted to pay, I think with Litecoin back then. It was ancient time, and they had like this dusty terminal somewhere in the drawer. They took it off. Someone took the charger. Then it was booting for 5 minutes. The barista was complaining, "Oh, no one paid with this in ages," and couldn't you pay with credit card? It was funny because they didn't accept cash, so it was crypto or credit card. So that was not a good experience. That's not the way how to do it. So anyway, so this is just kind of the first thing, how to think about it differently. So the reason I mentioned this is it is not about accepting crypto and hoping they will come. You need to work with it a little bit. You need to show people kind of your values, kind of attract this type of audience. But that's only the beginning. so so I've been using crypto in businesses. It's mainly Bitcoin, Monero, and stablecoins. I will explain what place do each of these have, but with so one of the nice things, I'm not sure who did it. It's someone um, uh, someone posted on some Bitcoin forum a strategy. I'll send you the chart. You can link it, where you have in your portfolio an allocation of 99% cash and 1% Bitcoin. I don't know if you have seen the chart. It's quite famous. So basically, this portfolio outperforms, the S&P 500 and bond portfolios and so on, or actually performs kind of like that. But what is interesting is because it is 1% Bitcoin, if you account in USD, your maximal loss is 1%, which is definitely not the case with S&P 500 or bonds or something. So an interesting way to look at it is, because when you talk to entrepreneurs, they always start talking about volatility. And I'm always like, guys, you are entrepreneurs. Volatility is your bread. You are harvesting the upside. You're this is your livelihood. You are actually collecting cherries from the upside volatility. Um, and if you do business, what usually happens? Okay, so you have downside. You don't have enough customers. You cannot produce fast enough. Suppliers fail. Supply chain failures. Bank doesn't give you a loan. Inflation. That there are 100 things that can kill you. And if everything goes right, if all these things are not screw up, then you maybe make some profit. um, with crypto, if you use it and if you allocate some of the profits in crypto, what this gives you is you can have an additional upside potential that is not correlated, hopefully, with your business. So you can have reserves. You can every businessman, I think, should save some money into reserves, just for the rainy day. Um, so 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 you can save. You don't need to save everything in crypto, but this can actually help you because you might not be able to get a bank loan. The economy is screwed, but just in case, Bitcoin or Monero or whatever you hold shoots up. Um, of course, by the allocation, one of the strategies I actually, even in my book Cryptocurrencies, I show a lot of strategies for working with volatility. But one of the strategies is actually allocation. 90% fiat, 10% crypto, and so on. So that's one of the strategies. Another strategy is, which in tax health works much better, is never sell your crypto and only use it as a collateral for a loan. That way you never sell. If you don't sell, you don't generate any income. If you don't generate income or capital gains, you don't pay income or capital gains taxes. So it all works well. So when you think about it, okay, it's not about, someone paying me for coffee with crypto. It is about kind of generating this potential for serendipity and upside that can actually help you in hard times, or it can help you even in good times to invest in the business and so on. Um, so uh, it's actually the first thing I teach people in the course is put some money in crypto, some company money in crypto, grow it slowly. You don't need to, go all in. But this kind of counters the fact that you have 100 things that can go wrong and only a few things that can go right. Of course, if a business has more than one product or service, then you have more than one upside, but it's still quite imbalanced. So entrepreneurs, I always laugh, when they talk about, oh, Bitcoin went down 3% or whatever. I'm like, guys, you're entrepreneurs, you're not waiting for a salary. You're not, rats that expect a paycheck every month. You should be thinking differently. So this is quite interesting. Saving and collateralized loans are I think very very good options for entrepreneurs. Another thing I've been doing, and actually this is all, it saved several of my businesses and non-profits. I'm not, writing something in Excel and theorizing. We've been, for example, we had one company, and during COVID, everything stopped. Every all customers, which were in this case mostly big institutions in one of the company that I have, which is called Hack Trophy. It is a bug bounty program, so kind of like shared economy for IT security. Most of our customers kind of considered this home office as vacation, and there was no business rolling in, and we were like, okay, we need to put more money in the business. And then one of the co-founders said, oh, hang on, we have some Bitcoin somewhere on Trezor, because some of our customers insisted on paying with Bitcoin. And it worked. We could continue operating. We didn't have to put more money in, and and we didn't sell it either. So that's also nice. So this is kind of all backed by experience. Another use case, actually two use cases, are the parallel police, the places I started. These are non-profits, but non-profits also need cash flow and need to have money, because sadly landlords still want us to pay rent, however cool we are. And of course, I'm not saying that it's always nice. So, for example, when we were building Parallel Police in Bratislava, we raised all the money we needed for the reconstruction of the building, and it was end of 2017. And then suddenly all the money which we kept in Bitcoin became not even a third or something. It was like
Yeah, yeah.
total crash. So we had to raise a little bit more, and we didn't sell either. So we also use it just as a collateral for our loan. It slowly came back. So you need to kind of work with it. Do not gamble too much, and play the long game. But it's very useful. Another thing that we started doing was. Um, for international business, for example, if you have a group of businesses and they need to pay each other, it is quite difficult to have bank accounts for every company, because it's total pain. Of course, you need to go through KYC, AML, blah blah blah, one day of stories, so you can start a company anywhere in the world by filling two forms, and then you are suddenly flying to some country and so asking for a bank account. But in many cases you don't need a bank account, because if this is a group of companies, there can be one company that is doing the sales, and then you can have um, you have a, let's say, a contractor that supplies one kind of product. You can pay them in crypto, they can start their own company, and you can do it like this. Here we started using Monero the most, and the reason is well, there are actually three reasons. So first of all, we wanted to use Lightning, but okay, that's good for $100, not so good for $50,000. The second reason is privacy, because if you do this, it doesn't have to be your own company. It can be a third-party supplier, and you don't want to see, all the profit margins and all the wages and everything on chain. So in business, you are transparent to the shareholders. Sometimes have to be transparent to the whatever tax office or your accountant. But you don't need to be transparent to your whole world, so to the whole world. So this is quite useful, and it's actually there are quite a few companies that actually pay out or pay wages in Bitcoin, and it's 3 clicks, and everyone knows everyone else's salary, and of course, if you choose to have a transparent company where the salaries are out in the open, you can do that, but you don't have to. It's a private business, and transparency, I'm not such a fan of transparency.
Not by default.
Not by default, exactly. But the third reason is um, um, if you are in tax hells, in many tax hells, what happens is that you need to do. So there are a few ways how you can do accounting. So of crypto assets. These are international standards, so it's not for any particular jurisdiction. So the first one that is usually allowed is first in, first out. So basically, you have like a warehouse. You have your crypto in there. You put one unit of crypto. Let's say it's one Monero for which was priced when you put it in the warehouse for, I don't know, $50. And then when you pay out, withdraw, exchange, or use it to pay invoice, you need to take the first one. So if the price of Monero is now $100, you are paying capital gains of the difference between 100 and 50. It doesn't matter that you bought Monero yesterday for 100. You need to calculate the capital gains tax from the first one. So this is first in, first out. What would be the best for business is last in, first out. Especially if you use it for payments, because you see, okay, I need to pay this invoice, I buy Monero and I immediately pay it out. There's no tax because the exchange rate of the last Monero didn't change. Unfortunately, most countries do not allow last in, first out.
Why would they?
Yeah. There's one more method which is a little bit better, but still not very good, which is weighted averages. So basically, when you buy, you update the price, and then you have one price of the whole stash of Monero. So this is, but still, you unnecessarily pay a lot of tax just because you paid an invoice. It doesn't make sense. So what I found out, what is good, is that you use, for example, Bitcoin in reserves as for capital fund, for saving for the rainy day. So you have one warehouse with Bitcoin, which you price however you want. I suggest the weighted averages, but I suggest you never sell it. So only use it as a collateral for loans. So there are no taxes there. And then you have a pile with Monero, which is a different warehouse with different price. You cannot combine Monero and Bitcoin prices. It's a different type of crypto, and you always keep it empty. So basically, what you do is, if you want to pay an invoice, you buy Monero and you spend it all immediately. There's no capital gains. The exchange rate when you buy it and when you pay it out is the same. So this way you can use Monero for the payment method, and you can save in Bitcoin, and it's the best tax optimized way, again in tax health. So of course there are countries where you don't have to deal with this. By the way, for example, in El Salvador, you would do Bitcoin only because they are actually a tax hell for all crypto except for Bitcoin. Not many people know that, but it's not Paraguay or Panama where it doesn't matter. It's whatever works. So this is quite a good strategy. We have found in Hack Trophy, the bug bounty program, that actually also most of the hackers want to get paid in crypto.
Yeah, that's standard. You'd expect that.
If they're local, sometimes, so if they're from Slovakia or Czech Republic, sometimes they want fiat, but if it's a hacker from Bangladesh or Pakistan, they're not going to give you, wire transfer information and wait for 3 weeks and whatever, they just want crypto. For these things, it is quite useful. I said you can use stablecoins as well. So I said Bitcoin, Monero, and stablecoins. Most people use stablecoins for the payment case, just to not have to deal with exchange rates of crypto, which is a nice use case. The stablecoin market has been rising quite a lot, and it's quite interesting. It is now roughly on par of Mastercard network. So settlement in stablecoins, roughly the yearly amount settled is the same as Mastercard. So it's not it's not a small business anymore. It's quite a huge payment network. But what I do and what I like doing better is again use stablecoins for collateral, for collateralized loans. So basically, I short them. I short fiat because if you borrow something, you are short, because you are if you return it, 5 years later, and the inflation has eaten the value, you actually have to return lower value. You have to, of course.
Purchasing power wise, you mean?
Yeah. But you have to also calculate interest rates somehow. But this is quite a useful way. One thing that I like to talk about in relation to business is inflation. Maybe we can talk a little bit about that if you like, because most people do not, even entrepreneurs, most of them don't understand inflation.
I
First of all,
think a lot of people
yeah,
understand inflation. I just think a lot of people. I was actually thinking about this today. I think a lot of people just have been programmed to accept that it's normal in society for some reason. And I suppose even for myself, before before getting into money as a concept, before you start understanding it, that you don't think about it, right? It's just something that exists and you don't even think about it. But I can't even remember where I was going with that. So take us away.
yeah. So basically, everyone understands that prices rise in fiat, and their purchasing power is going down. Many people, if you talk about crypto, they would say that crypto is kind of an inflation hedge, which I don't agree with, because a hedge would be something that basically clears it out evenly. It's if you talk about hedging, it's not gambling in another way. It should actually reduce the risk completely, but you're not reducing inflation risk with crypto because it has volatility risk that cancels out anything like that. But so I'm just saying I don't like the word, but what I think people don't understand is how uneven the inflation is. And that's the first thing. And especially for entrepreneurs, that they're actually paying taxes on inflation, not only in reducing purchasing power, but in income taxes. So I'll explain how it works. So I have an example that is specific to Slovakia with the numbers, but it can generalize. So let's say it's 1st January. I'm going to do some business. I have €1 million. And my goal is to invest it in business, make some money, and then if I'm successful, I want to buy a house on the hill in Bratislava. So that's the initial assumption. So I'm basically delaying my consumption, investing into business with the goal to make some more money. So I have €1 million. I put it in the business, 1st of January. I'm pretty good in doing business. My profit margin is around 20%. So let's say at the end of the year, I have 1.2 million euros that I made. Um, Data point, which is from 2021, was that the official inflation, the consumer price index, is 9.25%.
CPI.
Yes. So at the end of the year, I made a profit of 200,000 euros. In Slovakia, I pay 50,000 if it's 25% in income tax. I pay 10,500, which is 7% in dividend tax, and I'm left with roughly 140,000 euros, 139,500. So if I calculate it with the official inflation rate, what I could buy in the 1st of January for a million, I would need 1 million and 92,500 for. So I roughly need 90,000 euros more in December to buy the same stuff. So if I pay the taxes, my profit is only 47,000. So it's basically a profit margin of 4.3%. So I thought I made 20%, but in reality, after paying taxes and official inflation, I'm only 4.3%. So the first question is, was it worth the risk? I put 1 million in business. I was doing all right, 20% profit margin is quite common in many, especially service businesses. So it's not a low margin, and I only made 4.3%. So not really good business. But okay, now I want to buy the house. So I look at the prices of houses, and the price of houses during that year rose 22%
Sure.
in the specific area.
Sure.
Now, basically, after doing all this business, risking 1 million euros, I need to find 82,000 euros more so I can buy the house that I wanted to buy in the first place. So the story with this is that So the difference is, someone calculated some inflation by taking this, imaginary basket, and they put eggs and tomatoes and a bit of rent and the gasoline, and they somehow weighted and calculate some kind of inflation. But you have a different inflation rate, which is based on what you are buying or what you want to buy, and you don't know it in advance. Um, so the question here is, okay, why risk all this money? Because you could have lost it. It's not a business, never works magically. You were basically in this case, the entrepreneur was actually speculating not only on the upside of his business, but also on the purchasing power of euros. And they lost horribly. It's so the entrepreneur is good in making money in whatever they want to do, but they're gambling on the purchasing power of euros, but they don't see it. The balance is 1 million in the beginning, 1,100,000 at the end. So they see there are more units, but they can buy less with it. So where I'm going with this is everyone is gambling on volatility and on price of money. But if it's the same number in the bank account, you don't see it. But it's there. You cannot buy the house, and you need to actually get more money.
Yeah.
to buy the house. So that's what I like to tell entrepreneurs. You think that we are all degenerate gamblers, and we are putting money in this volatile thing called crypto, but you are doing the same thing. You just don't realize it because the number doesn't move.
Exactly right.
But
Yeah.
the prices are volatile. So
Exactly.
So,
Yeah, that's the thing. Most people just don't notice it. Man, there's so much to talk about. We've pretty much run through our half an hour already. I wanted to talk about, and we'll probably have to jump on another podcast to do it, about how to accept crypto and get set up for it. Because obviously, we could even make that a part 2 of this crypto in business series, if you will. Because obviously, a lot of people, including myself, are really not tech savvy at all. Setting up things on the back end for websites and even payment systems within stores is just something that most people, one, can't do, and two, have no interest in ever being able to do it. They need someone else to be able to do it. So if we can go through in the next episode, we can share some of the information. I ended up getting the Monero gateway set up for the website with help from a friend. So it really is that little step. As you say, there's so much opportunity with getting new customers, and just being open to a new payment system in general, a new monetary system in general.
Yeah.
But man, I tell you what, we've really run out of time.
Could be.
Yeah. We'll have to get back on, because I really want to pick your brain about. So, we've basically talked about one question today, and I've got a whole bunch more questions here, just even while we were talking. So,
sure.
Man, I really appreciate your time, and thanks so much for coming on again, man. It's been a pleasure.
Thanks for having me.
Pleasure, bro.